Welcome to the Mortgage Update with Dan Frio. For over 10 years, Dan has been helping AM 1160 listeners. With so many companies to choose from and hundreds of loan options, the mortgage process can be confusing and costly. Be sure to listen each day for Dan and learn the difference between FHA, VA, and conventional loans. You'll also learn how to negotiate lower interest rates and fees, as well as steps to buying your first home and whether refinancing makes sense. Stay tuned to find out why Chicago's top realtors are choosing Dan Frio.
Hey, welcome back to the Mortgage Update with Dan Frio. I, of course, am Dan Frio. And like I start every other show, please check me out. Just Google me. You'll find everything you need to know about me between LinkedIn, Facebook, YouTube's, emails, websites, everything you need to know. So today we're going to talk, actually, what I want to talk about right now, I just heard it on the radio, and it kind of, dinged a bell in my head. It was that cell phone company that says, the guy's walking along with the little kid or the mom or dad or whatever, and says, how much would you be willing to pay for something that's free? And the mom looks over and the little girl says, nothing, it's free. Exactly. So I want to kind of elaborate on that. When you're looking for a mortgage, you're looking for money. That's the best way I can explain it. So if you went up to somebody, or somebody came up to you and said, can I borrow $10? And you said, yeah, I'll give you $10, but it's going to cost you $4 to get that $10. Wouldn't you look at them like a deer in the headlights? Like, what are you talking about? Exactly. We're going right down the path that I want to go through. So you're looking for a mortgage. If you're listening to this show, you're either contemplating a mortgage, you're in the business, you're a realtor, or there's a reason why you're listening. And thank you for listening. And I hope you tune in every night. But when you're getting a mortgage, you don't have to spend $3,000, $4,000, $5,000 to get a mortgage. You should almost get it for free. And you might think, Dan, no, it can't be done. It can be done. So today I want to talk about me, what I do, versus what the big guys do. And I'm sorry about guys. It could be guys or girls or companies or however you want to phrase that.
That's not very woke of you, Dan.
No. So basically it's me versus the big boxed companies. I'll put it that way. So, I don't own, a stadium. I don't have, actors and race car companies and the like. It's me. When you call in, it's me. How do those companies afford that? And I don't want to afford that. So because they charge you a lot of money. So again, I'm going to go back to it. If you could get the $10, lent to you for free, and there's interest in other things on there, but to access that $10, you wouldn't pay your friend $4 to borrow $10. So why would you be willing to pay a company $3,000 or $4,000 or $5,000 to get a $100,000 loan? Doesn't make any sense. So let me explain what I'm talking about. When you apply for a mortgage, you don't need, there's a lot of things that are on your kind of the breakdown of that loan that you really want to pay attention to. And this just drives me crazy because people are spending thousands and thousands and thousands of dollars that don't need to pay those things. So when we start the process, or you start the process, what is required by law is for me and or the big box companies to send you a loan estimate. Okay, let me go back for a second. Dan, what are you talking about, the big box companies? And this is no bash to these guys. So let me just kind of go through a laundry list of places. Just Google, mortgage companies. You're going to see Quicken. You're going to see the Rocket Company. You're going to see Guaranteed Rates. You're going to see Wells Fargo, Bank of America. All these companies, those are what I reference as the big box company. Those are the big entities out there in the market that dominate. And the reason being is they spend hundreds of millions of dollars in advertising. How do they get that advertising budget? By charging you. They don't just miraculously just make the cash. Okay, so here's when we start the process, you call into a company such as mine or the big box companies. we then have to in turn send you what is called a loan estimate. Okay? The loan estimate, basically I want to focus on one thing in that loan estimate. It is the lender's fees. And if you're in the process of doing a mortgage now, or you just did it, or you're contemplating one, please pay attention. You're going to get a loan estimate, page 2, left side of the page, upper left. You're going to see some numbers. Those are the numbers that the lender is charging you. Don't be surprised if you see an underwriting fee, a processing fee, a doc prep fee, an administration fee. All these are, and I'll be blunt, they're junk fees. These are fees that you can't avoid by making a few phone calls. I would highly suggest call me. All of those numbers for me, 0. Versus if you even Google this, Google Illinois' average mortgage costs, you're going to see probably $2,500 to $3,500. So if you just want to blow that money, use me and send me a check for $2,500. I'm just joking. I can't accept the money. So that's basically that's the costs. Okay. So now let me explain the difference of what we do. There's really not much of a difference. Okay. So I'm going to walk you through this process. And again, if you're looking for a mortgage, or you're in the mortgage or real estate game, you're a realtor, you're whatever you could, or you're buying. You're a consumer. You decided, oh, you know what? I want to get a home this year. This is for you. And you can check all these episodes out on podcasts. Everything is podcasted. It's on my website. You can go to iTunes. You can find me. Just the Mortgage Update with Dan Frio. Okay. So here's the process that takes place when you apply for a loan. Let's just take it down to its simplest steps. All right. We're going to get a mortgage application from you. That's the data, your name, your birthday, your social security number, where you work, how much you make, your bank accounts, how much you have in there. We're going to pull your credit. In the second segment of this show, I'm going to go over credit hacks, different credit systems, the free versus the paid, and a variety of things to kind of educate you on credit. And it's awesome. It's some awesome details we're going to go through. So what we do, we plug all that information into the system. I do have an online system if you want. So if you're, a millennial or you just don't have the time to talk during the day and you prefer to do things online, go to the mortgageupdate.net or 1160mortgage.com. Both those go right to this system. You can, at the top left, you'll click apply now, and it's a 100% secure online system, and everything is done right there and then. Okay. You plug in this data. From the data, then we pull your credit. And again, we'll go over some credit things in the second segment. Then with that data, there's two entities out there where probably 90% of the mortgages go to or get uploaded to. It's Fannie Mae or Freddie Mac. Those are two entities you might have heard of, you might not have heard of. Sometimes when I reference that to people, they're like, oh yeah, that Fannie Mae, they're terrible. Well, they're not. If it wasn't for them and Freddie Mac, there would be basically no mortgages from 2009 and 10 to basically almost now. So we take your data and we upload it, meaning we send your data into that system, Fannie Mae or Freddie Mac. We send it to one of their systems, their computer systems. Their computer system is going to read your data, your application, and your credit. A computer system is going to either accept the loan and approve it, or it's going to refer it. Means basically you need to make some tweaks, or it's going to be denied. So we all use this system, believe it or not. Me, Quicken, Wells Fargo, Bank of America, Guaranteed Rates, all these systems use that system. Okay, it's the same thing. And again, we're getting to the point of why are you spending so much money getting money when you don't have to? So we upload your information into that system. It then comes back and says your loan is approved. Okay, now what we have to do is we accumulate all the stuff that it's telling us that we need so we can validate the data that we put in. So meaning you put in that you make $5,000 a month. Well, how do we validate that? We validate it with your pay stubs and your tax returns and your W-2s. So don't get upset when people ask you, we need your W-2s and we need your tax returns. We need, all your, if you had 3 W-2s last year, we need all those. You're getting money. You might be getting $1, $2, $3, $500,000. Would you want to give somebody $500,000 really without doing your due diligence? No. So that's basically what we do. We all ask of you what this system is asking of us to validate this system. So then you get us all the data that we ask for. Basically, it's 2 pay stubs, your last 2 years W-2s and federal tax returns, bank statements, and whatever else that might have spit out from that automated system. So once we accumulate all that data, now we actually send it into a person who is licensed and trained to go over that computerized system and say, okay, now it's my job to validate all this information. So now they're going through and validating all that information, saying, you said you make $5,000 a month. Your W-2 has that you make $60,000. Okay, that works. Click. You said that you had $10,000 for your down payment, and your bank account has an average balance of, or a current balance of $10,000. That is good. And they'll basically go through that punch list, and then they'll come back and say, okay, we need more validation for this or that or whatever they might ask for. That's the mortgage process, basically, in a nutshell, condensed version. We all do the same thing. So what did I do different, or what did that other company do different in there that justified them charging you the $3,000? Nothing. Okay? When we come back, what I'm going to go over with you is we're going to maybe kind of push the credit system back a little bit further. I'm going to go over what's the difference in the rates, the fees, the options, all the other pieces of the puzzle when it comes to the mortgages. So please stay tuned. This might be a way you might be able to save $3,000 or $4,000. Hey, welcome back. This is Dan Frio, the Mortgage Update. Thanks for tuning back in. What we're going to go over now is we went over, me versus the big boxed companies, the big entities out there, the Quickens, Wells Fargo, Guaranteed Rates, those. I'm not bashing these companies. They serve a huge purpose, and they do a ton of business. How do they do that business? Advertising. They get you to call. They have these, you could, on your way home, tonight, or on your way to work tomorrow, or watching TV tonight, I guarantee you're going to see some commercials from these companies. And that's how they get you to call. How are they paying for these things? Well, they're charging you. So now what's the difference? What do I do different, or do they do different that might justify them charging you $3,000? Really not much anything. And here's what I mean by that. The programs that we all have, basically, when I reference it back, we use Fannie Mae and Freddie Mac. Those are the programs that we use. So those guidelines are dictated by those two entities. Okay, so we're all working with virtually the same guidelines. Okay, so now the interest rates. Well, Dan, their rate probably's got to be better than yours. No. In most cases, I can beat them. Probably 9 out of 10 times. If you call me for a quote and you already have one, don't even tell me what you have. I'll give you a quote. Probably 9 times out of 10, I'm going to beat that quote. This isn't a sales pitch for me. Well, it kind of is. But what I'm trying to do is educate you on how there's people blowing hundreds of millions of dollars in services they don't need to pay for. Again, it's that commercial for the cell phone company. Why are you paying? What would you be willing to pay for a service if that service is free? Well, nothing. Exactly. Okay. So the interest rates, they're probably going to be the same. I might even be able to come in lower. So you're getting virtually the same products. You're getting the same or better interest rate. Now you're going to have people say, well, we underwrite in-house. Who cares? If I can get you an approval within 24 hours, approve and validate your loan within 24, 48 hours. Do you care if the person approving your loan is sitting right behind me? Or if I had to, email or do a computerized system with a company that's doing that? If you're getting the service, do you really care it's in-house? So that to me is, a lot of people, we do everything in-house. You probably don't even know what that means. So don't be swayed because of that. Now let's go to the end result. You receive the mortgage. I've had this several times in the past few years where a client will call me and say, Dan, I want to deal with somebody local, a local company. Or they're like, I have to deal with, or I want to deal with, one of the big banks because I can just go right down the street and make my payment. Or if I have any questions, I can walk down the street to that branch and, discuss my loan with them. Okay. Did you know that almost every loan or every mortgage there is transferable, and most of them do transfer? So you might say, well, Dan, I want to deal with Wells Fargo because they're down the street. I have my checking account with them. I love them. They take care of my accounts so well that I'm willing to pay an extra $3,000 to go through them. And again, I'm not targeting Wells Fargo. I just threw that name out there. Okay, so you go through this whole process. You get the loan, you get approved, you close, you move into the house. 6 months later, you get a letter saying, you know what? We just transferred your loan to XYZ Loan Company or LMNOP Bank. Now what? You spend $3,000 to go with that bank, and 6 months later, you're not even with them. So just so you know, all these mortgages can be transferred. They're bought and sold daily. I have my mortgage. I've had it for like 8 years, and it was at the same place. Then all of a sudden, within the last 2-3 years, I've been to 3 different places. So nothing can change. No terms can change. No payments can change. Nothing can change. Basically, it's only a payment. We call it a servicing center. So the servicing center is where you send your payments. So that's the whole piece of this mortgage puzzle in a nutshell. So don't pay for a service, especially $2,000, $3,000, $4,000, if you can get that service for free. So that's my spiel on that. So if you're looking for a mortgage, please let me know. Give me a shot at least. And let's see, I'll prove it to you what can or can't be done. All right. So now let's go on to, let me see the next segment I got for you. We're going to go over some credit, we'll call it, no, let's go to another segment. We're going to talk about terminology. We don't have a lot left. What I'll do tomorrow is I'm going to make it the credit show tomorrow. So please tune in tomorrow if you want to know about free credit systems, paid credit systems, how it all works, credit hacks, how you can increase your credit scores, maybe 30, 60, 100 points within days. And it's not a farce. I have one YouTube video that's probably has 100,000 hits, and it's basically some tricks and hacks on how you can do that. So right now, let's go over some terminology. All right. So I just listed down some things. When I was talking to people this week, I wrote down some areas where when I said a word, the person kind of hesitated, and then some of them did ask me, some of them didn't ask me. What do you mean by that? So I'm going to go through it just as I wrote them down during the week. Underwriting. What does underwriting mean? Your loan is in underwriting, or you have to be underwritten. So basically what it is it's 2 parts. It's the automated system we spoke about in the first segment. So we upload all your information into a computer system. That computer system basically underwrites or reviews. Basically, that's a better word to say. It's reviewing your data and making a credit decision based off of that data. So a computer system looks at your data and accepts or rejects your application. Now, there's another step in underwriting. The next step is we validate the information that we uploaded into the system. So we say you make X amount of money. Now the validation process is we're validating with pay stubs and W-2s and tax returns. We say you have X amount of money in the bank. How are we doing that? We validate it with bank statements. So underwriting is basically somebody or a computer system reviewing all of your data and approving or denying your application. Okay? Down payment. This actually confuses some people. The down payment it's always referenced normally in a percentage. Okay? What it means is it's your skin in the game. So the down payment there's different variations. There's VA loans have virtually no down payment. It'll finance 100% of your loan. So if you're buying a $100,000 home, they'll finance $100,000. The next program, let's just go with an FHA loan. FHA requires 3.5% of a down payment. Dan, I don't understand what down payment is. Okay, it's the percentage. 3.5% of the purchase price is the money or skin in the game that you have to put. So $100,000 loan, if you need a 3.5% down payment, again, it's a percentage, 3.5% down payment, your skin in the game. So 3.5% of the $100,000 is your skin in the game. So that is $3,500. So just take whatever we say is your down payment percentage, multiply that by the purchase price or the value of your home, and that is the down payment. So again, if you required 3.5% down payment and you're buying a $100,000 home, 3.5% multiplied by 100,000 is $3,500. So that is your down payment. Now, conditions. You might hear somebody say, oh, well, we have 5 more conditions left. What is a condition? Okay, a condition is, and that's our terminology, is basically once that underwriter or that person reviewed your application, they're coming back and saying, we have these conditions that need to be met for us to validate your data. So, again, you make $5,000 a month. You sent in a W-2 from 2 years ago saying that you made $5,800. Well, they're going to say, well, that doesn't equate out to $5,000 a month. So we're going to add a condition to your loan approval or your loan decision to say, we need you to validate the $5,000 a month that you say you're making. That is a condition. So your loan is conditionally approved based on you getting us that condition. So the condition would be, we need 1 or 2 pay stubs showing that you make $5,000 a month. We need that W-2 showing that you make $60,000 a year. So that is a condition. Basically, it's your loan is subject to these conditions being met. So these you need to validate this data. Servicer. Just think of the servicer. You might say, you might hear me say or somebody say, that's the servicer of your loan. Basically, that's where you're sending your payments. So in the reference that we had earlier, if you took that loan out with Wells Fargo, they're the servicer. They're the one collecting the payments. So again, the servicer is basically the lender that you're using to make your payments, where you're sending your payments to. That's basically just the servicer. That's going to do it for now. So tomorrow we're going to pick up, and tomorrow's show is going to be awesome. We're going to talk about everything credit. This affects everybody. Even if you're not looking to buy a home, stay tuned. Tell your family, friends, everybody. You need credit, and credit scores play a huge role in your life. You might not realize the role it plays. It could be the interest rate of your credit cards, your car loan. It could be the decision of you getting a car loan or not. It might be the decision of you getting a job or not. If your credit is absolutely horrendous, your employer or your future employer can deny you that job. So I want to thank you so much for listening today. Please come back tomorrow. We're going to go through everything credit. This is Dan Frio on the Mortgage Update. If you'd like to reach me, give me a call, 630-338-1160, or on the web at 1160mortgage.com. God bless.
You've been listening to The Mortgage Update with Dan Frio. For over 10 years, Dan has been helping AM 1160 listeners. With so many companies to choose from and hundreds of loan options, the mortgage process can be confusing and costly. Be sure to listen each day for Dan and learn the difference between FHA, VA, and conventional loans. You'll also learn how to negotiate lower interest rates and fees, as well as steps to buying your first home and whether refinancing makes sense.